Good morning, everybody. This is Mauricio Carrillo from FXStreet. We are starting our BoE Bank of England live coverage on its rates decision. We are with Valeria Bednarik and Yohay Elam. Good morning, guys.
Hi,
Morning.
everyone. Good morning. How are
Uh,
you?
Fine, Valeria. So, what do we expect today for the BoE? BoE, Valeria?
Okay, sorry. Well, pretty much we are not expecting a lot of change from their actual currency, actual monetary policy, sorry, meaning they are going to leave rates unchanged, the APP program also unchanged. What we were focusing today is on the inflation report and whatever Carney has to say on the upcoming movements of the central bank and how concerned or not they are about economic global slowdown or inflation or whatever other subject, right? Pretty much we are trying to take out some tips from his wording about what's next from the Bank of England and whether if they will rise rates or not during the first half of 2016 as the market has been speculating most of this last year.
Thank you very much.
Yeah.
Hi, Yohay, how are you?
Hi, Mauricio. I'm doing well. Looking forward to this Super Thursday. As Valeria said, the focus is not on the decision. I see here on this Super Thursday, of course, no changes in the decision. The first reaction, I believe, will come from the voting pattern. We have the meeting minutes. Last time it was 8-1, 8 against the hike, only Ian McCafferty for hike. No changes expected. If we have 7 against 2, it's of course good for the pound. If we have 9 against 0, it's bad for the pound. And then, as Valeria said, traders will begin reading into the MPC meeting minutes, and of course, more importantly, the quarterly inflation report for a direction on trying to guess when the Bank of England will raise rates. I think a lot depends on the Fed and not only on the Bank of England, not only on the British economy.
Okay, nice. Thank you, Yohei. So let's go to the action. Ranjit Reddy from the chat is asking about what we expect on the sterling against the euro, against the dollar, sorry. Valeria, what do you expect about the cable today?
Well, pretty much, if you take a look at the charts, you will see that latest dollar strength has done little damage to the pound, right? We have seen the dollar rising strongly against the euro to multi-month lows. The pair, the yen is approaching 22, but the pound is hovering, as you can see in the chart, pretty much in range because it's not only about probable dollar strength, the movements we have seen, but also about euro weakness and Japanese yen weakness. Both central banks are aiming to extend their facilities, right? In this particular case, the fact is that both central banks are in the tightening path, meaning, of course, the Bank of England is waiting for the Fed to act first to prevent the pound from appreciating too much. But pretty much I'm seeing a strong pound, you know? So if we have today some kind of hawkish comments, meaning they are confident and they are seeing a rate hike coming sooner than expected, and as Carney said a couple of times already, the pair could rise back to the 155 level. I have been watching this chart, following this chart, because we have met selling interest many times in approaches to that level ever since mid-September, right? So this is a critical resistance for the pair, at least technically, and I don't see how we can break above it today because we have payrolls tomorrow in the US, so the market will be discreet, right? So with a really hawkish stance and a change in the voting, as Yohay has just mentioned, we can go up to that level today. On the other hand, if the bank is expressing concerns over the economic developments, which they should not, or avoid offering a certain time for a rate hike and forget to mention a rate hike, the pair can go down, and therefore I'm looking for a test of this trend line in the 50 to 60, 70 region. Still, I see the downside limited, right? I see more upward potential on a hawkish tone, than a bearish potential on the dovish one. And again, keeping in mind that the market won't dare to move that much away from current levels ahead of tomorrow payrolls.
That's right. That's right. We have a major event tomorrow. Valeria, I think I have some echo from
What?
echoes from you. Sorry, and some reverberation. Yohay, I know that you got a lot of participation today in your show. What was the major concern about today's event?
Well, many traders are not focusing actually on pound dollar, which is, as Valeria said, in range and waiting for the non-farm payrolls, but looking at other currency pairs, pound related, which are, of course, euro pound, a very popular cross. Let's look at that, and that has been going down. It's getting closer to the 70 level. So currently it's 70.64. I see support there at 70.25, and then below the round number of 70 we have 69.40. So if we have a hawkish decision, a hawkish wording from the BoE, we could challenge perhaps these levels. And on the top side, 71.40 and 72. And pound yen, the dragon, also did a nice move to the upside. We can see here it's approaching important resistance at 188. I also think that there's more chance than not that we'll have a stronger pound, especially against those two currencies, because the economic situation in the UK is improving. Wages are good. Yesterday's services PMI was positive. Manufacturing was good. So and Carney is relatively more hawkish than the middle. So I believe there is some potential for the pound to rise, perhaps more against these two currencies, the yen and the euro, with the monetary policy divergence, and not the pound, and not against the dollar with the strong dollar in recent days as well.
Thank you, Yohay. So for you, we will see a BoE hawkish today, but what about tomorrow Fed? We'll have also a Fed, a hawkish Fed. We'll have an open better tomorrow. How the trader could wait on those two big events? Let's say in the cable, yeah, perhaps today we will have some kind of rise in the cable, but tomorrow, with let's say a big surprise in the employment report, we will see a comeback in the pair. What do you think?
Yeah, if we have a positive jobs report in the United States, above 200,000, a comeback of the jobs to recent levels, to previous levels before the week September and August, of course we'll have a stronger dollar across the board, including against the pound. But I would not bet on the pound in this case, because if this means rate hike, increasing chances of rate hike in the United States in December, because of a strong NFP, it also means that the rate hike in the UK is getting closer, because I think Carney is looking to Yellen for hints he wants to be the second central bank to raise rates, not the first among the big economies, of course. So I believe that for the NFP it will not be the best pair to trade. Shorting cable may have some benefits, but perhaps little. And it also goes the other way around. If we have a weak non-farm payrolls, if we have another disappointment, third in a row, I think, of course, pound dollar will rise, but not as much as perhaps other currencies can rise against the US dollar.
I see. Valeria, we are 5 minutes to go. What the trader need to focus right now?
Well, I agree with Yohay what he has just said about being more interesting trading the pound against the euro or the Japanese yen, which are clearly weaker today. So, and as I said before, I don't believe that the pound and the dollar are big rivals at this point. As we were saying, both central banks are in the tightening part, right? Of course, as we remember, we said the UK will wait for the US to act first, but that's what I said. If the news is pound positive, I see a better rally, and if the news is pound negative, a limited decline, right? So the crosses could be the more interesting today.
Oh, thank you. So, okay, so we are just 4 minutes to the decision. You remember, traders, that we have a standard delay of 30 seconds. So I will type the decision in the chat, and then we will react to the reaction. So we will cover the reaction of the pair. What will you say, Yohay?
And another cross that was mentioned in the show, one of the people in the community asked, and I'm very glad for all the questions, regarding the pound, was pound CAD, GBP CAD against the Canadian dollar. We've seen this cross trading in range. As you can see here, the lines I've marked are 201, 202.70, and 203, more important to the upside, 2 to the downside. So if we indeed get a hawkish number, perhaps we can challenge 203 to the upside and break out of range on pound CAD. I know not many traders are trading this, but it's also an interesting cross.
Well, I noticed that lately that one has been trading alongside with oil, pretty much moving when oil rises, Canadian dollar rises, and therefore the pair declines across. And when oil plunks like yesterday, so the pair goes higher. So it would be a good tip to take a look at whatever oil is doing when trading this one.
Yeah.
Okay, so 2 minutes to go. Let's check if there is a question here. Okay, we are just waiting for the data.
Yeah, I was thinking that Yohay mentioned that the voting will also be relevant, and of course it is. We have an 8-1, and we may have a 7-2, right? A huge surprise will be 3 members voting for a hike, because I don't know, but I don't remember that this year that we have 3 voting members pledging for a hike, right? 2 has been the maximum, so 3.
Yeah, that's right.
We had 3 voting for a hike. That should be ultra bullish for the pound, ultra positive.
Yeah.
Okay, here we go.
Yeah, 1
And
minute.
go.
Waiting. Yeah.
Yeah. Let's look at the before and after. So before 153.88, very stable.
Yeah. It's having a hard time to move above 54.10 right now. But if it does, it can retest the week highs around 54.50.
Yeah, and 55 is strong resistance.
55, yeah, is the German wall, right? The one that divided the east and west.
10 seconds, less.
Yeah, here we are.
Okay, unchanged.
Unchanged.
Yeah.
And everything the same.
Everything the same. They both the same. So we are plunging.
The pound is falling.
Fresh weekly lows on an initial spike. Yes, market was hoping for a more hawkish stance. Here we go.
Yeah. So let's see what the news is in. First support 153, then 152. 8 to 1 was very much expected, so it's probably in the statement. Let's see if we can get some headlines here.
This downside risk for inflation over the next 2 years, getting balanced in 3 years. That's new because they had a shorter play term for balanced inflation, so that's pretty negative for pound. Okay. They had their CPI forecast, yeah. Pound impact to persist. They don't want expensive pound. As pretty much as the ECB, they are doing the Fed to do the dirty job, right? Dirty job.
Yeah.
Oh, actually, well, yeah, it was dovish.
So
They,
is Carney also participating in these kind of currency wars?
yes, he
Think
said
so.
he could extend QE and even could rates if the downside persist. How do you say?
Oh yeah.
I don't want my stinky currency.
Selling written by the pound. There was a song, I think. Um,
The rest of the market is pretty much unaffected by the news, meaning it's just about the pound
yeah,
right now.
Yeah, McCafferty
extending its
was.
funds.
Go ahead, Yohay, sorry.
No, the pound is falling also against other currencies. We're seeing here Euro pound making a comeback, bouncing higher, almost 71, and also pound yen under 187. Quite a fall there on pound yen, I would say. Almost 80 pips or so.
They also cut growth forecast, so not just inflation.
So they're looking. In the past, they used to look at the glass half full. Now they look at the glass half empty. It's quite a surprise because recent data has been positive: strong retail sales, strong wage growth, and positive PMIs this week. We're getting closer to 153.
The final numbers were better than the previous estimates.
Yeah.
So far, the pound dollar has found some support around 53, but it can go down to the trend line, guys.
Yeah. Another headline I see here is that pound strength to continue dampening inflation even after the second half of 2016. So they're directly complaining about the British pound, and the pound is reacting.
Don't talk in the currency.
Sorry?
Don't talk in the currency, I said.
Yeah. Not the first and not the last to do that.
Yeah, as I said, they are waiting for the Fed, both the ECB and the Bank of England.
So
We are going to have
fall.
December, guys.
Sorry?
We are going to have a huge December,
Oh
a
yeah.
really intense month.
Yeah. And so the pound is just testing the 53.10.
Yeah, 153.08 is the low so far.
Yeah. Let's see. Crosses.
Yeah, the crosses have moved against the pound also,
Yeah.
and the rallies have also stalled. Market is digesting the news and consolidating a bit.
Yeah, we have a range of 100 pips in almost 97 pips in pound yen today.
Yeah, and a euro pound. You have a euro pound. There is just
Testing
recovering the
71.
71. Yeah, the 71.
Yeah, it already reached the low of 70.41 today, and trying to make a move higher. See if we can pick up more headlines.
The euro is going up against the Japanese yen.
Yeah, so 153.13.
Do we have a press conference? No, right?
Yes, at the quarter to 1 GMT we have a press conference because it's the inflation report, the quarterly inflation report.
That's right.
Okay.
That's right.
I don't know what else you can say after we have the meeting minutes and the quarterly report out there, but and pound is reacting, dipping below 153.
We have to assume that inflation report will be gloom. Okay, there we go. New rallies, new lows for the pound against most of its rivals.
Yeah.
Break 53 in there.
Ooh, quite a fall. That's a crash.
Yep.
So they see inflation below 1% also in 2016, and in 2017 it's expected to reach 2.1%. Certainly pushing back on inflation targets.
Yeah.
$52.88 is the new low. See how low the pound can go.
So we need to wait for the press conference. Well, I don't know from the press conference, the inflation report, but honestly, they wanted to tone down the sterling, so the scoop is to sterling down, right?
Yeah.
Oh yeah.
And against the dollar, if we got in line before tomorrow, we can expect more downside in the cable and of course in the euro dollar too.
Yeah, the pound now is more vulnerable than it was before. I must say, I'm surprised, and especially after all the good data, and also that we still have one member, Ian McCafferty, still voting for a rate hike. But this is sort of in total, it's totally different than the data that they release about the inflation forecasts. Yeah, quite a fall. 71.10 on euro pound. Sorry.
Yes.
Okay, so
Outlook for global growth weaker than in August, so they also blame China, I guess, like everybody else. Downside risks include more abrupt more abrupt slowdown in emerging markets.
yeah, they lower forecast for GDP to 2.7 this year and 2.5 next year, but they maintain the long-term jobless rate at
Yeah,
5%.
employment seems not to be a concern. And sorry to interrupt you, but employment seems not to be a concern, neither in England, neither in the US. And considering that we have payrolls tomorrow, I'm not really sure that a positive payroll could be enough to warranty a December rate hike in the US, because the problem continues to be depressed inflation all over the world. And we are seeing it again right now in the United Kingdom. I don't know. We need inflation to pick up. We need more consumption. We need oil prices to rise, more consumption there. Get rid of the oversupply market. There's a lot that needs to be changing currently to see inflation actually rising in major economies. And I do believe that as long as we have not a change in there's little currencies can do, right? To appreciate strongly, be really firmer. I don't know. It's just an idea I was thinking about. Now that you said about employment, I remember it. Sorry, but it's not employment the question. The question is inflation, and we have just had proof of it. And there we are. The pound is testing the trend line near 50 to 60. Really impressive. I was not expecting such a negative tone from the Bank of England, and it's a surprise, honestly, guys.
Yeah, we're already 100 pips down. It's quite a crash. I also say, yeah, you're right. Regarding inflation, the Bank of England, like the ECB, they have officially only one target, inflation. On the other hand, if we have wage rises in the UK and low unemployment, the forecast is supposed to be for higher inflation because people have more money and they have more work and they buy more stuff and prices are expected to rise. But apparently that's not what the Bank of England thinks today.
Yes, supposed, as you said.
Yeah. That's why I'm surprised. They do say that domestic momentum is resilient and that growth is likely to pick up a little in mid-2016. So these are the positives. So maybe it's like the Fed. They see a positive local economy, but they're worried about the world, so they fear perhaps we'll have slowdown in the future because of external factors, because of the Eurozone, because of China. And maybe that will, of course, hurt inflation and hurt jobs. So maybe that's the reason. But maybe just talking down the pound.
Yes, do you know what time is the webcast? The
Carney's press conference at 1:45 GMT in half an hour, more or less.
half an hour. I see. Okay, guys, what do you? Well, let's see the euro dollar. What do you think about the euro dollar? Well, you know, right now it's just testing the lower band of the range. Where we're just testing like a 3 months low just ahead of the Northern Perils. So, what is your approach? What is your take on that, Valeria?
Well, pretty much. I do believe that the pair maintains a pretty bearish tone, and what we are seeing right now is barely a corrective move, right? The pair has reached extreme oversold readings in these days, in this last couple of weeks, and I honestly don't see much of an upward potential. We're below the 960 level, 900 is the first, but below 960, which is for me a strong static support level and resistance now that we broke, and as long as we stay below that level, I do see the risk that towards the downside. There is not much of a fundamental background of why the euro dollar may rise, because this last talkings of Yellen and Draghi has highlighted the imbalances between both central banks, right? What was Draghi said that he will consider extending quantitative easing in December. Yellen said that they may raise rates in the same date. So we're talking about a huge imbalance between both central banks, between both economies, between the future of both. And if that background persists, there's not much room for the upside in here. I believe that the market will be happily selling on spikes higher, right? Up to 110 at this point seems a great opportunity for me if the pair bounce such much, but I don't see it honestly recovering to 110 short term. I do believe that we need to break above 920, okay, to see some upward potential, a corrective movement towards 960 and then to 110. But if we lost again the 840 level, we can go back to 800 and even lower.
Yeah, I agree with what Valeria said. It's monetary policy divergence at its best. We've seen it this week, well, especially on Tuesday we heard Draghi repeating what they said in the press conference, what he said about perhaps cutting rates, expanding QE, extending QE, expressing worries. And then yesterday we also had good data from the US. ADP was okay. The ISM non-manufacturing PMI was excellent, especially the jobs component. And then we had Yellen talking about the December's live meeting. Dudley, Fisher, number 2 and number 3 in the Fed, also repeating the same stance. Perhaps we'll see some more range trading towards tomorrow's non-farm payrolls. We have some figures today in the US, but they're not as important as the ones we had yesterday, and of course the one we have tomorrow. So perhaps tomorrow, if we have an okay NFP, 200,000 or more, nothing extraordinary, maybe that will break the July 20th low of 108.10. Currently, we're not that far from that place. So, and that was the post-recovery low right here. So, in that case, the road is open for the really low levels that we've seen in the spring. But of course, no, it's better not trade before the event. Wait for the news. Like we had today, a surprise with the Bank of England going to the dovish side and hitting the pound quite hard. Carnage, as they say.
Yohay, I know that, well, the Fed decided to go up with its rates. Yeah, technically and fundamentally, the dollar will go up. But the initial reactions, that is, everybody is expecting that. Don't you think it's a little bit priced in?
Yeah, perhaps now after the strong ISM non-manufacturing PMI, expectations might be a bit higher. So maybe we'll see some immediate profit taking. But in general, if we have figures that do support a rate hike, that do raise the chances, then I believe that at the end of the day tomorrow, after the initial choppy reaction, the dollar will be higher. Another figure to watch is the wages. They're currently at 2.2 year over year, which is a little bit mediocre. We're expecting to see more of the same. If we have a tick up in that, it's of course very dollar positive to 2.3 or even 2.4. The sort of resistance line in wages was 2.3. And if we see it fall, disappoint again, of course it'll be dollar negative. In any case, this is also something to watch. What I put now on the screen, the CME's FedWatch group. It's the implied probability of rate hike in December. After yesterday's big event, it went up from around 50-50 to 56% for rate hike now at the beginning of the US session, and we'll have to have also one eye at that to see how bond markets price the rate hike following the NFP. Not only the NFP numbers, but also what we see here, and that could also give us a hint for the direction of euro-dollar after the NFP.
What do you think, Valeria?
On what?
Yeah, of course the dollar will go up because the carry trade
Sorry.
imbalance is in back.
I'm not sure. The market has been pricing a rate hike for the first half of this 2015 in the year.
That's right.
And we have that huge disappointment in September, and we see gold rising and the euro rising up to 17. Remember the euro being in 17 a couple of months ago? And all of a sudden we're almost 100 pips below that level. Incredible. But anyway, I do believe that some be priced in, but not all, because the first rate hike will mean new rate hikes afterwards, right? A slow pace but steady, as Helen said. So I'm not expecting much of a retracement, particularly in the currencies that are weaker, which central banks are also thinking of easing, like Japan and Europe, Maybe the reaction won't be so explosive in the pound, dollar, or against other currencies that seem stronger. The other one that is pretty weak is the New Zealand dollar. These days has been smashed, the poor New Zealand. But overall, I do believe that the market has erased much of those hopes in September and early October, and are slowly building it up again after the October meetings, but mostly against the euro. So I'm not seeing much of a buy the rumor, sell the facts, you know. It's
Yeah.
just my view, but I could be wrong, of course.
Okay, so yeah, the pound dollar is right now at 152.77, and I am showing right now the daily chart, and for me it's a triangle there with the flat consolidation. But what are the levels to watch right now? Yohay, in the level in the pound, you know, it's just coming back from 155. But what do you think, just in front of the Northern payrolls?
Levels to watch on the downside in pound dollar: 152, 150, 150, and I would say 151, sort of the 50 pips increments, and the top side 153, 153.60, and much higher 155. These are the levels I see on the pound. Of course, the pound is much more vulnerable now than it used to be just half an hour ago. But it's still in the sort of stronger currencies basket, despite this blow it received now from the Bank of England.
Yeah.
So euro dollar is more interesting to me in the context of the NFP tomorrow.
Yeah,
Nosso dollar, yeah.
right now
Yeah.
that you say about the euro dollar, Fabian from the chat is asking that why if the sterling dollar went down so much, why the euro dollar is going up? Yeah, what is about the correlation between that two pairs?
Well, the pound is being smashed by its central bank, and therefore, with the decline in all pound crosses, we have some demand for euro against the pound, a strong one against, but it's reacting immediately against the dollar. Sorry, but pretty much the central bank has been pretty doom about the future of inflation in the United Kingdom, and that means that they may delay the rate hike for after the first half of 2016, and therefore that's why the pound is falling. But the euro is not actually rising; it's trading in between 20, 30 pips.
Yeah,
It's
that's
a very
nice.
little reaction.
Yeah,
Yeah, it's a
Yeah.
great.
yeah,
Yeah, the effect on the euro is inexistent or very small. We had same question in the morning show. If there is any correlation, it's that if in the UK they're afraid about inflation, maybe also in the US they'll be also afraid, worried about inflation. So then less a weaker US dollar against the euro, and the euro is rising just a bit. But that's sort of a very sort of more remote theory and very much on the sidelines, because what we're seeing in the past 20 minutes or so is just 25 minutes is just a reaction to the Bank of England. Everything else is just more or less range trading and unrelated to the Bank of England.
Yeah.
okay. So guys, I think it's time to wrap up. So I will ask you both. What about what happened today and what will happen tomorrow just in front of the Northern payrolls? So this time let's start with Yohay.
Okay.
I know Valeria will forgive me for that.
Yeah.
But I want to give the word first.
It would be easy for me because I said I would only have to say I agree with Yohay.
Okay.
Okay, so
Yeah, we had a very dovish surprise from the Bank of England. They decided not to change policy. The voting pattern was unchanged at 8-1. But what's important is the tone of their quarterly inflation report. They decided to see the target of inflation only 3 years, lower forecasts for inflation, lower forecasts for growth, reaching the target only, well, sometime in 2017, 2018 in the future. Worried about sterling, worried about emerging markets. I think they're seeing the glass half empty instead of seeing it half full, because they did at least they do have reasons to be cheerful. It's not so bad. Perhaps they want to, I suspect they want to weaken the pound, participate in these currency wars, gives the pound a little knock to the downside because things are not that bad. Anyway, it's not what I had expected, probably not what markets had expected. We're 100 pips down, and we'll see if maybe it'll recover a bit with Carney, but I'm not sure.
Okay, thank you, Hey. So, Valeria, what's your
Well,
take?
well, I agree with you. No, seriously. I believe that we have a very negative surprise from the Bank of England in the end today. I was really not expecting such a huge long-term downgrade of the inflation outlook because in previous meetings they have been pretty confident that inflation will pick up sooner than later, and this was a very negative surprise which resulted in what we are seeing, a really weak pound, right? The rest of the market is holding my. I do believe the market will now flip its attention towards tomorrow's payrolls, and we may see little action after this during the rest of the red day, I mean. And of course, regarding payrolls, if the numbers are better than expected, we can see some interesting rallies in the greenback, particularly against the weaker euro, the weakest yen, and the weaker Aussie, right? Keep in mind that the strength of the currencies is really relevant. If we have some weaker currencies and a stronger one or a report favoring one, we can need to go in those crosses particularly. And also, we will be covering live also again tomorrow. So, I invite you all to join our live coverage tomorrow of the non-farm payroll report.
Yeah, I have a last question for you, Valeria. It's Siva from the chat that he's asking about the pound Australian dollar. What do you think about the
Aussie.
pound
I'm
Australian?
not sure if I ever saw that pair in particularly. I follow the pound. Give me a second.
Well,
And I,
perhaps you
yeah,
have an approach of
I
that.
have the chart. Yeah, pound,
mm,
of course, falling also against the Aussie. No big surprise.
Yeah.
I put here support at 213.43, which was the low a few days ago. I also received a question about that in the morning show. Maybe Valeria has other observations about the technicals.
I'm taking a look at the chart for the first time in centuries. I'm looking bigger time frames
I
because
don't see your chart, Valeria. I don't see
you
your
don't
chart.
see my charts.
No.
Okay, give me a second. Can you now see it?
Check.
No.
No. Yes, I got it.
Okay. It takes
Okay.
a while. Okay. And pretty much the movement seems to be interrupting a bullish trend in here, and pretty much what we are seeing in all pound crosses. We have low around here in 2.1340, which seems to be a nice support given that we have previous highs there, right, and lows. So take a look at that level, guys, because if we lost it, that would mean further bearish momentum in the cross for probably towards this area, 1270 or so.
Okay. So thank you, guys. Thank you very much for coming today. And see you tomorrow, Valeria. I know that you will be with us and doing that extremely accurate and fantastic opinions on Northern payrolls. Thank you for coming today, Valeria. And Yohei, of course, I know that you won't be with us tomorrow, and you will have a day off tomorrow for the Europe open market, but you will be with Dale Pinker in his show, right?
Yeah, we'll talk to you later on about the NFP, do some preview and maybe other stuff. Yeah.
Okay, so guys, thank you very much. You remember that the Bank of England released a Dobby Stone today, and of course they wanted to put the pound down. Just
We
pay
did
attention to
it.
the yeah, and they did it. Just pay attention to the 52.30 level and then the 150. That is very much in play. So, guys, thank you very much, and see you tomorrow. I'll see you later.
Okay.
See you. Bye
See
bye.
you.
Bye
Bye-bye.
bye. 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 Bye.
Hi, traders. The market is like the ocean.